Hello there, thanks so much for clicking on this video. Today we're going to dive into an exciting topic, stock trading. Now, stock trading might sound complex, but it's essentially about buying and selling shares of a company's stock on the financial market. Think of it as a marketplace where you can purchase a piece of a company or sell it when you think the time is right. Are you ready to embark on this journey? Come along then. Stock trading in its simplest form is buying and selling shares in a company. Imagine a bustling marketplace, but instead of fruits or vegetables, the commodities being traded are pieces of ownership in various companies. This is the essence of stock trading. It's more than just numbers on a screen, it's the pulse of the global economy. But why do people trade stocks? The primary reason is to make money. People buy stocks with the belief that the company will grow, increasing the value of their shares. If the company performs well, the price of a share goes up. If it doesn't, the price falls. But it's not just about making a quick buck. Some people trade stocks as a means of building long-term wealth, often for purposes like retirement. Now let's talk about how the price of stocks is determined. It's all about supply and demand. If a lot of people want to buy a stock, demand, the price goes up. If more people want to sell than buy, supply, the price goes down. It's as simple as that. However, the factors that influence demand and supply can be complex. Things like company performance, economic indicators, political stability, and even global events can affect how people perceive a stock's value. For example, if a tech company announces a revolutionary new product, demand for their stock might increase because people anticipate that this product will boost the company's profits. The price of the stock will then rise. On the other hand, if a car manufacturer recalls one of their models due to a defect, the company's reputation may take a hit, causing people to sell their shares, and the price might drop. So every time you trade a stock, you're participating in this vast, interconnected system, making predictions about the future, and potentially reaping the rewards of a successful gamble. And remember, every share you buy represents a piece of a real, operating company. So in essence, when you trade stocks, you're buying a piece of a company. Pretty cool, right? Now, not all stocks are created equal. There are different types of stocks that you can trade. Let's dive in to discover these variations. The most common type of stock that people refer to is, well, common stock. It's your standard slice of a company, offering a proportionate share in any profits or losses. If a company does well, so do you. But if it falters, your investment might take a hit. With common stocks, you also get the right to vote at shareholders' meetings, giving you a say in the company's direction. Then we have preferred stocks. These are a bit like the VIPs of the stock world. Preferred stockholders get their dividends before common stockholders. That's right, they're first in line when it comes to payouts. And in case of bankruptcy, preferred stockholders will be paid off before common stockholders. However, they typically don't have voting rights. Now let's talk about dividends. A dividend is a portion of a company's earnings that's distributed to shareholders. It's like a thank you note from the company for investing in them. Not all companies do this, especially those in growth phases, as they may prefer to reinvest their profits. But established companies, think big multinationals, often give out regular dividends. It's a source of consistent income for investors. Finally, there are different types of stocks based on the company they represent. You've got sectors like tech, finance, healthcare, and so on. Each sector has its own dynamics, and the stocks within them can behave differently. For instance, tech stocks might be more volatile but offer high growth potential, while utility stocks could be more stable but grow slowly. Understanding these different types of stocks is key to becoming a successful stock trader. So take your time to learn about them, their pros and cons, and how they fit into your investment strategy. It's a big world of stocks out there, ready for you to explore and conquer. Beyond just stocks, there are also futures and options you can trade. Now, if you're wondering what these are, let's dive right in. Futures and options are essentially contracts, but they are not as daunting as they sound. They are simply agreements to buy or sell an asset, which could be stocks, commodities, or even currencies, at a specific price on a specific future date. Let's break it down further. A future contract is an agreement to buy or sell the asset at a predetermined price at a specific future date. The buyer of the futures contract is obligated to buy the asset when the contract expires, while the seller is obliged to provide it. On the other hand, options are slightly different. They give the buyer the right, but not the obligation, to buy or sell the underlying asset at a specific price before the contract expires. There are two types of options: call options and put options. A call option gives the holder the right to buy the asset, and a put option gives the holder the right to sell. This might sound like a lot, but don't worry, it all comes together with practice. Trading futures and options can be a great way to diversify your portfolio and hedge against risks. However, it's crucial to remember that with greater potential rewards come greater potential risks. Futures and options trading requires a good understanding of the market and a well-thought-out strategy. Thorough research and careful analysis are key. It's also a good idea to start small and gradually increase your exposure as you gain more experience and confidence. So why should you consider futures and options? Well, they can provide leverage, which means you can control a large amount of assets for a relatively small amount of capital. They also offer the potential for profit in both rising and falling markets. Futures and options can add another layer of complexity, but also another layer of opportunity to your stock trading. So now that you understand the basics of stock trading, how can you be successful at it? Well, the path to success in stock trading is not paved with gold, but with knowledge, patience, and a dash of bravery. Let's dive into some of the tips that can guide you on this journey. First and foremost, doing your research is crucial. Stock trading is not about throwing darts in the dark and hoping to hit the jackpot. It's about understanding the companies you are investing in, analyzing the market trends, and staying abreast of financial news. The more informed you are, the better your decisions will be. Next, diversifying your portfolio is a wise move. It's the age-old wisdom of not putting all your eggs in one basket. By spreading your investments across a variety of stocks, you reduce the risk of losing everything if one company or sector takes a hit. Remember, diversification is not about making a fortune overnight, but about building wealth over the long term. Patience is another essential trait for successful stock trading. The stock market is not a sprint, it's a marathon. Don't be swayed by the dramatic ups and downs of the market, and don't rush to buy or sell based on momentary impulses. Keep a cool head, stick to your strategy, and give your investments time to grow. Lastly, don't shy away from seeking professional advice. Even the most seasoned traders consult with financial advisors or use trading platforms that provide expert insights. This doesn't mean that you should blindly follow anyone's advice, but it's always helpful to have another perspective. Don't forget, stock trading is not a guaranteed path to wealth. It comes with its share of risks, and it requires commitment, time, and effort. But with the right approach, it can be a rewarding journey, both financially and personally. Remember, patience and research are your allies in the world of stock trading. And with these tips in mind, you're well on your way to becoming a successful stock trader. Well, that's a quick overview of stock trading. It's a vast and fascinating world, isn't it? We've delved into the nitty-gritty of stock trading, from understanding what it is to exploring the different types of stocks such as dividends, futures, and options. Remember, knowing the ins and outs of dividends is key to making the most of your investments. Dividends are your share of a company's profits, and they can be a steady source of income for you. We also touched on futures and options, two types of derivative contracts that can be used to hedge against risk or speculate on the future price of stocks. Futures obligate you to buy or sell an asset at a predetermined price and date, while options give you the right but not the obligation to do so. And of course, we shared some tips for successful stock trading. Always do your research, stay updated with market trends, and never invest more than you can afford to lose. It's all about making informed decisions and managing your risk effectively. So there you have it, a whistle-stop tour of the stock market, and hopefully, you're now better equipped to navigate this exciting landscape. Remember, the journey to becoming a savvy stock trader is a marathon, not a sprint. Thanks for sticking with us till the end. If you found this video helpful, please hit the like button and subscribe to our channel for more content. Until next time, happy trading.